focus. ITA. Innovate. Enable.
Good evening, ladies and gentlemen, and welcome to State Bank of India and CNBC TV 18's The Export-Import Forum, powered by the International Trade Awards. The Indian exporter is consistently faced with a host of challenges, be it a weakening rupee, shrinking markets of Europe and the US, or high interest rates. There is an urgent need for Indian exporters to enhance their competitiveness and increase their share in the global trade. India has come a long way, but there are lots of grounds that need to be covered as far as the export sector is concerned. On that note, I would like to call on stage Mr. A.B. Ravi, Editor Special Projects, CNBC TV 18, for his opening remarks and setting the tone for this evening. Please welcome on stage Mr. A.B. Ravi.
Over the last 6 decades, West Bengal has had its shares of ups and downs. But now I see a renewed focus and initiatives being taken by the state government to rejuvenate the industrial growth in the state. A case in point is the Bengal Global Business Summit organized early this year by TMC government. And the response to the summit was very encouraging. Clearly, industrialists, businessmen are flocking to West Bengal. The state's favorable FDI policy saw investment pouring in the software and electronic sector. We can already see that Kolkata is fast becoming a major hub for the IT sector. At the same time, one cannot forget old industries like leather, hosiery, steel, tea, jute, which have put West Bengal on the world map. We at CNBC TV 18 have always felt a strong need to felicitate the growing tribe of exporters who are acting as the country's unofficial brand ambassadors. As a tribute to them, CNBC TV 18 has partnered with State Bank of India to host the 5th edition of the International Trade Awards this year. This award will be given to exporters for their outstanding and consistent performance across several categories. We do hope the Indian exporters get all the support from the government and they touch the $500 billion mark in the next 3 to 4 years. We wish them all the best. Thank you very much.
Thank you, Mr. Ravi, for your opening remarks. Ladies and gentlemen, to give the welcome address, with immense pleasure, I would like to invite Mr. Prashant Kumar, Chief General Manager, State Bank of India, Kolkata Circle. With big round of applause, please welcome on stage Mr. Prashant Kumar.
We are very happy that Kolkata is amongst one of those 5 centers where the bespoke event is being organized for exporters by State Bank of India with CNBC TV 18 as media partner towards enhancing export and imports. It will be a great platform wherein issues such as high interest, transaction cost, bureaucratic issues, stringent labor laws, and infrastructure rules would be discussed. At the very outset, I would like to say that in spite of so conducive environment, or rather not so conducive environment for volatile rupee, low demand of US and Europe, high cost involvement, slump in oil prices, stiff competition, Indian exporter community have done a great job. India's export performance is crucially linked to the performance of its domestic manufacturing sector, and fortunately, now with the launch of Make in India campaign and its stated intention of eliminating obstacles such as infrastructure bottlenecks, labor regulations, licensing and taxation, the Indian government has clearly set its objective to enable India to become a global manufacturing hub, which is in all respects going to help exporters in coming future. Thank you.
Now I would like to invite here Dr. Soumyakanti Ghosh, Chief Economist, State Bank of India, to deliver the keynote address.
I'll speak today on the topic, India's foreign trade way forward. It is now clear that India's future growth agenda cannot rely on just one sector as it has been the case in the past. Neither can we have a pure export-led model like China, nor we can have a service-led growth of the mid-2001. India's economy needs a rebalancing with the opportunity set available domestically and abroad. The good thing is that government is taking several steps to boost the shipments. India's potential as a hub of global manufacturing is also steadily gaining grounds. With largely domestically financed growth and availability of cheap labor, which is the primary advantage for India, India can develop advantages in export-oriented manufacturing. The organized industry in India accounts for around 19% of India's GDP, and this share is down from more than 20% since 2011, and it has been steadily declining. However, the recently launched Make in India will make India a manufacturing powerhouse and has advocated for boosting exports and incentivizing import substitutions. I'll just conclude it by submitting that to encourage exports, it is imperative for extensive domestic reforms in all areas of logistics, manufacturing, fiscal, financial, and overall economic performance on the part of both government and industry, with targeted initiatives for improving infrastructure and international shipments on a priority basis. Thank you all for your patient listening.
Good evening, everybody. I think the Indian exporters are hemmed and hawed from all sides. This budget has left them high and dry. Then there is a currency volatility that is happening, and the world market seems very muted or tepid. So against this backdrop, how can Indian exporters become globally competitive? That's our talking point. And what do they want from the government of India? The rupee generally has been like the tailwind for the exporters. But now it's proving to be like a headwind. We saw euro going from 85 to 67. We saw pound going from 103 to 93. Similarly, against Russian ruble also, I think rupee has appreciated by 50%. So given this kind of dynamic that is happening in the marketplace, what kind of strategy should exporters have today to grow? And we are looking at $750 billion kind of a target.
See, our competitors, the main competitor is China. They have been having a fixed currency exchange rate between US dollars and the yuan, and similarly with euro and yuan. As a result of which, they are still able to export, or rather they are able to even take a share of our market in Europe, and of course continue to export in US dollars. Whereas in our case, you see, we are down by 22% against euro and against US dollars. Our competitive countries are having an edge of nearly 10% with relate to our exchange rate with the US dollars. Okay. So that is the reason. Until we have a level playing field with our competitors, it is very difficult to match them.
Mr. Budhya, so do we need a currency strategy in terms of knowledge? Like China has got fixed rate. We saw their export going up 43% in February. So what needs to be done?
Absolutely right. But we have also seen dollar to rupee going from 38 to 68 and vice versa. The main point is that it cannot be too far and too wide. We have to have a price band within which we can hedge our strategies, and I think it would be prudent that if we hedge about 50% to 55% of our exports receivable, the net receivable, if we can hedge 50 to 60%, then at least we are sure that against this we are getting a certain amount, say 65 rupees, and against the balance 30-40%, then it is up to the market risk. So at least you are covered to a certain extent. If you go by the market rate, you would never know where would you land.
From a banker's point of view, do you think if you accorded priority sector status to the export sector, will it help the export sector?
Priority sector, definitely the focus would be there. Priority sector they can think of, but insofar as the position now is concerned, because as you said and everybody knows that this revaluation of the rupee and vis-a-vis and creating problem. So in loans in foreign exchange, we have those EPC, PCFC, EBR for FCNRB. There is one particular thing I wanted to tell you. There is a particular scheme called EPBG, Export Performance Bank Guarantee. Okay. That if you convert the term loan into a bank guarantee and then have bills under that negotiated, the money can come and repay the bank guarantee, the term loan completely, and then the interest to be paid against term loan you do not have to pay. It stands as a bank guarantee. It's from fund based to non-fund based. It can be. It's a good thing to now that the stress is on. One can think of taking this advantage of this particular facility.
The exporters can take advantage of this.
So that they can reduce their interest costs to some extent.
What is your own experience at the ground level?
As far as the tea sector is concerned, we are getting good benefit from the bankers as far as the exports are concerned. So we have, in tea industry has no grudge as far as tea industry is concerned. But definitely the cash incentives to the industry which should be there. It is 100% value addition. Tea industry 100% value addition. There is no import component. So the cash incentives should be much more than what we are getting.
Let me get the jute sector. The jute export has not gone up. I think it's gone up from some 300 to 350 and then again fell down. So what is the strategy here for the jute exporters?
India is the largest producer of jute in the world, you see. And Bangladesh, between India and Bangladesh, we account for nearly 90 to 95% of the world jute production, you see. First of all, the Bangladesh cost is much lower. The labor cost is nearly 50% of India. Then the electricity cost is less for them. And the government on top of it gives them a 10% direct subsidy, 7.5 to 10%.
Okay.
As far as India is concerned, we used to get some export marketing assistance about 3-4 years back here.
Okay.
But since last 3 years, that has been stopped. What we want first is that, at least to start with, that the government should force the Bangladesh government that they should not pay any incentive for goods coming to India. Number two, when Bangladesh is exporting raw jute to India, we have to pay import duty. But in finished goods, there is no duty.
Okay.
So, our cost goes up when we import raw jute here. But when we buy finished goods, there is no duty, so the traders are going against the organized industry or the jute industry, and so the main thing is we told the government that if we could introduce anti-dumping or we could force them to stop paying the thing, then we have a better chance.
Okay, let me get the leather. I think leather also seems to be a good trade. It's going at 18%. I was told 22% of the 10 and 50% exports goes from Calcutta. And it's also focused where the government of India is concerned. So, do you have any concerns?
Cost of the transaction is very high, especially in the eastern part of India. If we are comparing with the southern part and the western part, I think we are paying almost more than double the cost of the transaction.
Or the transport, you're saying the logistic cost?
Logistic cost. And the frequency is also because the frequency from Calcutta to Europe or to US. We have to go by feeder vessel to Singapore or Colombo, and then it has to go forward then. So we lose another 2 weeks, in the process. Where the advantage in southern India as well as western India, in third day the goods are in the ship and then is delivered in 3 weeks' time.
Okay, let me send to Mr. Chaudhary, very unusual sector we have here. What are the challenges you are facing?
We are exporting solar panels, which is, as per the Prime Minister, it is an emerging sector. I think with the plans of 100 gigawatt of installations in the next 5 years, it's an ambitious plan for us to, take on. What I'd like to just talk a little bit about the IT sector, because solar falls under ITES, IT-enabled services. So, India is importing almost $5 billion worth of IT products on an annual basis. There was a point where this decision by the government of India could have been taken that we will be a manufacturer and an exporter rather than an importer. We are at the cusp for solar in the similar sense, and I feel that it's an opportune moment to merge solar with the Make in India program, and the bigger agenda is how we can implement a lot of these plans that have been set out, how we can make sure that these are pro-industry and are helping industry to succeed.
I'm going to ask each panelist one simple question. If you were a commerce minister today, how would you make life easy for exporters? 2 or 3 points, each panelist.
Ease of doing business, which is a pain at the moment. I'll try to ease of doing business. Getting your, not wasting time on getting your money, not wasting time on getting your refunds. And then second thing I'll do is provide seamless infrastructure and logistics. to the exporters. And then the cost of funds is a very important thing. You see, we are totally out of competition. Our competitors are getting the cost of funds is 2 to 3%. Against that, it is costing 11 to 12%. And it is not in priority sector exports. So what I'll do is I'll request the finance minister to bring it under the priority sector and then give the interest subvention long term and across board. No selective subventions. Okay. And with that, the cost of funds should come down.
Mr. Budhya.
One, export as engine of growth. That should be the clarion call. So there should be a sense of urgency, there should be a sense of priority that next to defense is the export. Okay. Number two, to enliven and to give life back to the SEZ. And number three, government stated policy that we need to export goods and services, not taxes and duties, which is happening at the current stage. We are not getting refunds of what we are currently paying till the GST comes in place. So whether you call it FPS, you call it FMS, or you call it duty drawback, we need to be compensated what we are paying, which is not our cost of goods. So that taxes and duties need to be refunded. Earlier it was refunded in the name of DPB, Duty Entitlement Passbook Scheme, which has been replaced by Duty Drawback Scheme, but which is just the 50% of what it is. So we are not competitive. So the whole gamut is that we need to be competitive, for which we need to be compensated for the taxes and duties till the GST comes in place.
Countries like China and all do a lot of marketing as government on behalf of the exporters in various countries to showcase their products, to showcase their skill in geography and in products also. A marketing has to be done because government, as like Incredible India, that particular thing is that is very important. And the other thing is that exactly from the Federation, the government should try to know what are the logistic problems that these people are facing, because whenever I'm asking, this logistic problem is the first thing they are saying, not the interest subvention or the others. So this, I think, is a very important issue that has to be solved.
Okay. Mr. Pujara.
To do exports in an easy way, you see. Reduce the transaction cost, and definitely the interest has to be reduced if we have to export. I mean, that is extending the interest subvention, and pay a major trust on the R&D and marketing.
First and foremost is incentivize the exporters, make it profitable to the manufacturers, see industry-wise, and then make it that they export. Everybody has got the spare capacity today in manufacturing. Okay. You just give incentives. Don't shy away from giving little money here and there.
Well, I think from 300 billion to 750 billion by 2020, there has to be total emergency in this sector. They have to declare the export is an emergency. Then only this is possible. These are small things, the cost of the interest and other things. This will fall within the line. If they do that, it's possible.
First and foremost, promotion of innovation and productivity is very important through R&D, through intellectual property rights, and through technology upgradation fund. I think something similar to textile. Concerning our sector, I think if we get advantage to upgrade technology, we are more sellable, we are more attractive to the international market. The second one is, activate Exim Bank a little bit, because I see that in matured market, Exim banks are very pro exporter. They come with their money and their power to attract investment, attract product offtake. The third one is obviously land reforms, labor for large infrastructures. I think the kind of numbers that we are talking about, we will need to create cities who are catering to the export community, and ease FDI norms to bring in more investment in this sector, which will create, again, awareness for the government to take it seriously even more.
I think from what I gather, the story of the exporter is the same. Whether I go to Coimbatore or whether I go to Hyderabad, I go to Ludhiana, it's same. It's the transaction cost of fund, infrastructure issue, and I think the same story is being repeated here. Gentlemen, thanks a lot for being on the show.
Ladies and gentlemen, moving on. State Bank of India would now like to honor the people who have excelled in the field of import and export and felicitate them for their achievements.
Investment, Enable.